What's good, family? It's your man Harrison back again with another video. In today's video, I'm going to be breaking down my best institutional trade in 2020. Let's get right into it. Alright guys, so before we get into the video, definitely subscribe to the channel. This is about to be one of the most blessed sessions ever. So guys, definitely subscribe to the channel. Let's get your boy to 50,000 subscribers. And family, don't forget to smash that thumbs up button. Let's try and get 300 likes in this video. Let's get straight into it. So guys, I'm just going to go ahead and delete these first of all, because how much you gain per trade is all to do with how much you risk per trade. So if you're risking 1%, 2% or 3%. So let's go to the 4-hour time frame first. 4-hour time frame on GU. Bring up my clean chart, boom. And 4-hour time frame. So what do you see, family? So first of all, what we're looking at, we're seeing they're generating liquidity and going higher. They're generating liquidity, running it out, and then they go higher. And so what happens over here? What happens over here? And this is a reversal sign on a much higher time frame. They have equal lows intact. They have equal lows intact. And when I say equal lows, it's just a concept where retail traders are taught when price returns back to the same area twice, that is it could be a buy or sell signal. So in this case, equal highs, it was a sell signal. Equal highs was a sell signal. Equal lows are signal to buy up. When they buy up, right, where's their money? They put their money down here. Every single retailer or every single person who's buying up, they put their money in this area down here, right? That's where they put their money, right here, okay? And so what happens is price will move away, and then eventually they'll come back down to run out their stop losses. So people who didn't close out their trade in this move up, you know, and it could be like banks, it could be retail traders as well. Anyone who hasn't closed out their trade, they're getting stopped out. They're getting stopped out. So this whole move down stopped out all the liquidity that was resting beneath here. So all of this liquidity, this is just consolidation, right? All that liquidity that was built up during this consolidation, which was down here, got run out. The top side got run out with this move up, and it was a monthly high as well. So let me just zoom a bit out. This is a monthly high, yeah? So there's money above here too, right? So when I zoom in now, check this out. When I zoom in now, what do you see? They run out monthly liquidity, run out all of this liquidity, and then they start breaking down. So this is where I managed to get my first entry. Don't worry about this. This is not what I'm talking about. So a few things to bear in mind now, right? This is the short-term low that took out the monthly liquidity, or all of this liquidity, right? This is the low that you need to keep in mind. I'm talking about the body, right? The moment they break beneath the short-term low, yeah, which is, they did that with this move down, right? This move down, right? The moment they broke beneath the short-term low, that is a good sign. Now they want to start going lower. They want to start going lower, right? So not only they produce a lower low, okay, which is this one, a lower low, right? They now need to go forth and produce a lower high. So this is what we're talking about now. This is why we was able to trade all the way up to here, catch the entries, and then sell it down. Don't forget, they've taken liquidity down here. They've taken this liquidity. Now they need to pull back up into a premium price. When I say a premium price just basically means a pullback to an area where most of us can jump in, right? And so what you would do, some people bring out the Fibonacci. I don't use Fibonacci. I wait for price to pull back to an area of interest, right? And then I sell it down. My mentees know exactly what kind of things we look for, okay, in these areas, because there's specific things that we look for, right? So check this out one more time. I'm going to explain one more time, right? So look at this. This is the short-term low that took out the liquidity. It didn't just take out this double top. It also took out monthly liquidity, okay? Monthly liquidity. So once it's done that, then you have to wait for price. When I say wait, I don't mean like just wait and sit in your butt, okay? I mean like obviously you can still jump in on these trades, right? But you need to understand what's going on. A lot of people are trying to just jump in, okay, but they don't even know what's going on in the markets, right? Once they break beneath that low, they pull back, okay? This is where you're going to be getting your entry from. I forgot to mention one of the things that I look for whenever price is pulling back, and I did mention this in my last video, but I'm going to mention it again. So guys, you know I'm looking for that institutional candle. So when price is pulling back, okay, when price is pulling back, I'm waiting for price to pull back to an institutional candle. So these two buy candlesticks here, I consider them as one candlestick. So this is the institutional candle that not only took out the liquidity above this high, but also took out the monthly liquidity, right? And so when price is pulling back, I'm waiting for price to pull back to this institutional candle before reversing or turning back around. You guys already know the deal as well. They either like to go to the open or to 50% of this candlestick. Here you can see that they've gone just slightly above it, and then they continue to plummet. So finally, that is one of the things that I'm looking for whenever price is pulling back. I'm looking for those institutional candles. Where do those banks get in? I want to know where the banks get in. If I can get in whilst they're mitigating their position, I am Gucci. I'm going to have a minimal stop loss, and we're going to ride it down. Now I'm going to go ahead and show you guys how some people could have used the Fibonacci tool, even though I don't use it, but some people could have used the Fibonacci tool to also get this similar entry. So I know some people use Fibonacci, so look, and I know some people have been successful, but I don't use Fibonacci. But if I drag it from this high, yeah, to the wick down here, look where price returned to. Price returned, and I explained this before about how to use the Fibonacci actually. So check this out. Price returned to a discounted price. So the 78.6 and the 88 is a heavily discounted price, so or heavily premium price in a sell, right? And so look, it returned back to the 78% and then it rejected, right? But I don't use Fibonacci, but yeah, I just wanted to show you guys what it would be like if you use the Fibonacci. Now you understand what's happening with all of this, right? Now I'm going to take you down to the 1 minute time frame to explain to you now why I was jumping in with those buys and why I got in with those sells, right? Okay guys, so now check this out. So this was the area I wanted price to pull back to. This is why I had all my TPs sitting here, okay, down here, right? So this was exactly the area that I wanted the price to pull back to. So first of all, we caught a nice move down, okay? And then once the market flow switched, so in other words, market produced a higher high and a higher low, there was a market flow switch. This is when I became bullish and started buying up to my zone, So this was my zone over here. So let me quickly zoom in a little bit more. So this move here was a 1 to 10 R to R. So depending on what you risk, okay, then that's what you're going to gain. If you're risking 1% per trade, you're gaining 10% on that trade. If you're risking 2% per trade, then you're gaining 20%. 3%, then it's 30%. And so now this is why I started buying up, okay, to the zone. So ultimately my goal was to get to the zone, okay, which it did, right? It got to the zone. And what I did was every single time I saw like a good pullback, right, or a decent pullback, that's when I would jump in with another trade. So this was the initial buy down here, okay? We got the high low or the 1 minute time frame in this section down here. And then they created equal highs, so I knew they wanted to go higher, okay? So once it pulled back, ran out this low, this is where I jumped in again, another trade up to the top. Okay, this one here was another pullback, higher high, higher low, higher high, higher low. This was another pullback, a slightly larger stop loss than normal, 5 pips on this one right here. So this is what they will do when it comes to your zone. So guys, I'm giving you quite a bit of nuggets here, okay? So this is what they will do. So they'll start to consolidate before they get to the actual zone. Trick people into going short early, right? And then they'll run them out. Okay, run out all this liquidity up here. So they'll just generate liquidity again. But obviously, if you know what they're gonna do and if you know where they're gonna target, right? This is why once they run out the liquidity beneath, which is this low here, you jump in with a scalp thing. This is where I jump in with my little scalp to the zone. After this, I'm not holding any trades. I'm not gonna be holding any of these buys once I got to the zone because that's exactly what I wanted, right? So I identified the zones on a higher time frame, and then I was able to catch entries on a 1 minute time frame. Okay, so that's exactly what I do. I identify the bias on a higher time frame and then catch entries on the lower time frame. So boom, then it got to my zone, as you can see down here. So this was a 1 to 9, that's a 1 to 9, 1 to 22, 1 to 26, and a 1 to 10, right? So already there's been a crazy amount of growth in this count. Even if it was just risking 1% per trade, you would have gained a crazy amount of growth. Okay, so a crazy amount of growth. Then when it got to my zone up here, okay, can you see how they ran through this area? So this is how you know they were just generating liquidity, right? Because look at these candlesticks. All of this action, small little candlesticks over here, and then you get one big candlestick here. So this whole big push, 1, 2, 3, that massive push up to run out all liquidity right into the zone, okay? Got to my area of interest, and then this is where I jumped in for the sell. And as you can see, this thing has just died. Alright family, so that's the video done. That was my best institutional trade in 2020. I'm hoping for even better trades in 2021.